Tristan, thank you so much for joining the What the Finance podcast. I'd just like to ask, so sort of my first question, fintech, it's become a massive buzzword that is thrown around, quite regularly. But can I ask, how do you personally define a fintech company?
Yeah, no, you're right. Is that these days it means everything and anything. And actually, from my perspective, I look at fintech in a broad sense. So, I mean, technically, it's just technology applied to financial services, but I look at it more from innovation standpoint. Is that for me a lot of innovation in finance? That's really what I mean by fintech. So I look at the intersection of business, finance, economics, technology, and this is where I see fintech happening. So if you come and you have an innovative business model with a startup in financial services, well, this is fintech. So it goes beyond just the mere technology.
Yeah, awesome. And I think we see sometimes people just label something fintech and it doesn't really, it's just to say that it is, but you're saying it has to sort of be something that includes technology and actually does have a sort of innovative and has an impact on whatever it's trying to improve.
Yeah, you're right. Yeah, there are a few software companies out there that are like, oh, we're a fintech company, and you're like, no, you're not. You're just a software provider. So it needs to do something in finance. Is that if you're just if you're an enterprise software provider, you're an enterprise software provider. You're not a fintech. You need to touch finance, otherwise it doesn't work. But I mean, it's for game. People do that because they know higher valuation. It's easier to raise funds. Like you put fintech, AI, blockchain, boom, and then you have the ultimate cocktail, and people are going to get excited about it.
Yeah, I was actually going to mention blockchain as well. It's just they're the buzzwords, aren't they? They get people, especially investors, very excited. So I'm just going to go on to sort of what would you say are the major trends occurring in fintech at the moment? I know it's quite a broad question.
Yeah, I see a few things that are quite interesting. So embedded finance, embedded banking, I think it's quite interesting because it's becoming a bigger underlying trend. It's not new. Is that it's your Uber? Is that you're not thinking about the payment? The payment is just happening, and now it's buy now pay later. But it's a broader trend of really finance being embedded in the customer experience and the customer journey. And I think more and more, because when you think about it, you're like, well, actually, I don't care about the financial products. I just want to do whatever I need. So I don't care about a mortgage. Actually, I want a house. And no one has been like, oh yeah, I really love like shopping for mortgages, or I really want a car loan. No, you want a car, you don't want a car loan. So more and more, I think you will have this embedded financial journeys. So this is one that is quite interesting. So obviously with growing payments and everything that has to do with online payments, online banking, because it's been so big with the pandemic. So you'll see an acceleration of branches closing because no one is going to the branch, to be honest. So you'll see an acceleration of digital banking. So yeah, obviously these are interesting. For blockchain crypto, I'm still, a few good things are happening, and there could be a lot of nice use cases. Will take a bit of time to clear the fog, and I see lots of bullshit, so I take a more rational view on it. Is that for me, I'm interested in the business applications and the actual use cases rather than you tell me a technology is revolutionary. I'm telling you, yeah, sure, to do what, and then show it to me, and then this is how we cut the crap.
Yeah, definitely. So that was quite interesting. So you talk about embedded fintech technology. So that's mainly just people, they don't have to look what's under the hood. They don't actually have to even know how it works. They just need to see what the results are. Is that sort of what that does? It reduces all the stuff in between what they want to actually get.
Yeah, it's for me, it's a lot about moving away from the products, credit card, personal loan, mortgages, and looking much more at the customer journey, because at the end of the day, this is what matters. It's much more than applying for a specific product. So you look at the customer experience, the customer journey, and a number of companies are just trying to work directly with whatever company you are and providing you with this like invisible kind of finances, which is what Klarna is doing, but you could see wider applications where you just don't see it. Like, it's happening, the payment is happening, the whatever your application for a loan is happening, you don't see it. And this is going to be it's just going to, banking or financial services is just going to become much more of a utility, and with a big focus on the customer experience. You're still going to have financial, like, not products but journeys, like for instance managing your money. You're still going to interact with whatever budgeting tool you need, but it's less so about the stuff where, as I was saying, you want to buy a house. Well, you go, you say, you go to see your real estate agent, you're like, okay, like this house, I'll buy it. As you make the offer is accepted, this thing is happening in the background, blah blah, and you get your mortgage and who cares, right? And this is what I think we're going to end up with.
Yeah, awesome. You don't really care about everything that happens. You just care how much am I going to pay. All right, that's cool.
Exactly.
So I guess the issue is the technology available? Because you said there's like a lot of BS that happens. Like, is it actually plausible, and is there the right technology for all these things to occur? Because I think sometimes these companies, they have such large dreams, but sometimes it's just not plausible.
Yes, I think a lot of the technology is available, but the trick is, as usual, is like it's combining all the technology and actually, I mean, when you look at it, you have a lot of technology. You can build a startup in with no code platforms, with everything. It's amazing. And same with, you can outsource the artificial intelligence. You can outsource pretty much everything. So it's about trying to combining everything and thinking about the customer journey, the user experience, trying to innovate around that, innovate within the regulatory framework. So how do you do KYC? How do you onboard a customer? Ticking all the boxes, but like without it being boring, without you like filling all the forms. So relying on things like open banking, so to grab the data where you need to, so to automate the processes. But this requires a bit of thinking around how do you actually do it, and how do you do all the necessary steps, and same for your own processes. How do you do credit risk? So how do you make sure a customer is going to repay, but doing it in a way that is quite innovative and is like less, oh, what is your credit score? And like, okay, you have 672. I'm sorry, man, it's 680 to get this loan. This kind of stuff, right? So it's just rethinking a bit some of these processes. But the technology is here. I mean, not everything. You can't do everything and anything that you can think of, but you can do a great deal of it.
Yeah, and I think we're finding it's just about the regulation and making sure that the regulation keeps up with the advancements in technology, which is, I think it's speeding up. What we've sort of seen as well is that many of the fintech companies have emerged just because of the shortcomings with like some of the massive banks, and that's sort of, they've been filling these gaps that the banks used to have monopolies, and now they don't have that anymore. Do you think this is sort of a concern for the large banks like the HSBs and the other banks, and are they sort of at risk of becoming obsolete?
Yeah, I mean, it is a risk, because when you look at any kind of industries, they all tend to be disrupted, and the average lifespan of a company, if you look at, you have amazing stats with S&P 500, for instance. You look average tenure of a company, it's like it's shrinking very fast. It used to be 50 years, now it's 20 years. So really, unless you're a company, you're huge and you've built a moat and no one can come to get you, like Google maybe. But banks, I mean, they don't have that much protection for the core businesses. Like fintechs have been eating away, and banks have been conscious about it. Like, oh, our customers are using TransferWise, it's fine. Dude, it's not fine. Like they're eating away like your business. And yeah, I mean, I wouldn't be surprised if one or several big banks disappear. Or the thing is, it's a slow death. It's like waste time. You're just relegated in the background, and people still have their bank accounts or their mortgage, and they slowly dripping, and your customer base is just aging, and at some point you only have 70-year-olds in your customer base, and that is shrinking fast because your customers actually eventually natural attrition, they die, and you lose customers and you don't acquire new ones. So I don't think overnight HSBC or Lloyd's is going to disappear. It's more slowly fading away. If you look at RBS, for instance, it used to be much bigger, like in terms of balance sheet, when they were doing much more investment banking. And then financial crisis, they realized, oh, we're bad at it. But they've been shrinking and they've been losing lots of customers, lots of employees over the past 10 years. And the trend is like still the same. So you need to look at 10, 20 years, and probably, yes, some of them, either they will merge or they will just be a utility where they just do mortgages, a bit like Fannie Mae, what's called Freddie Mac or Fannie Mae, like in the US, where you just do mortgages and you're fine with it.
Yeah, and that's interesting because I think when you mentioned TransferWise, they've just had a big IPO recently. And I think what we've found is the first sort of disruptive fintech companies, they're the ones that targeted the very profitable parts of the investment banks where they could just charge a fortune. They had no competition, and they was almost, with the currency exchange and all that stuff, they're literally almost robbing people. Whereas, and so basically what's happened is a lot of the most profitable parts of their business have gone. So they're needing to find sort of other parts that they can actually make money. Would you say that's correct?
Yeah, no, definitely. I mean, when you look at international transfers, how much you used to pay, and now like with TransferWise, I mean, it's insane. You would pay like, oh yeah, there's a fixed fee of like £20, and then you pay like a crazy interest rate. And yeah, a company like TransferWise, the guys were transferring money to their countries, and they were like, why are we paying so much? Let's start a business. It was an easy one, and then obviously as all the low-hanging fruits were picked, at some point you needed to go into a bit more complicated stuff like small business banking and then small business lending. So a bit like more complicated stuff, and we're getting there. But yeah, like payments was an easy win, and now there's no way like to. I mean, banks have tried, but the problem is that it's a bit late now because people are used to. That's the problem, is that if someone is used to another product and used to the customer experience, it's hard then to get them back. And now, people are used to use TransferWise. Why would you use HSBC? It's still going to be more expensive as well. Like, what's the point?
Yeah, and the UXs are great as well compared to a lot of the big banks. They're just so much easier to use. So let's talk about yourself, because you started obviously in sort of banking institutions, and you worked for Virgin Money for quite a bit. So do you want to talk about your own story, and then sort of how did you get into fintech companies? Now you're an entrepreneur. How did that happen?
Yeah, sure. So after high school, went to business school where I studied finance, so corporate finance, but also financial markets. I studied as well economics. I went to business school in France. I studied economics in the Netherlands. And as I graduated, I moved to London, worked, well, in the meantime, I did a few internships, but then moved to London. I did M&A a bit, and then I joined. At that time, it was a UK subsidiary of an Australian bank called National Australia Bank. I joined the corporate development team to work on the IPO of the bank. to carve out the UK division. We did an IPO in 2016. It's called like CYBG, wanky title. It's like Clydesdale and Yorkshire Banking Group, because it's Clydesdale Bank in Scotland, Yorkshire Bank. Anyway, we were independent for a couple of years, and then we acquired Virgin Money, rebranded the whole thing Virgin Money. So within that, I was doing corporate finance and corporate strategy. And with time, I got really interested in innovation, financial services, and what was happening in fintech, what was the threats, because when you do corporate strategy, you need to look at what are your threats like to your business. So I started very much looking at that space, and over time, like spending a lot of time with fintech startups, trying to develop partnerships, which was like really my focus the last 18 months at Virgin Money, developing strategic partnerships with fintechs. Because so yeah, I got interested in really innovative business models, what people are doing, what technology, what new technology can be useful for us, not useful. Blockchain back in 2016, when people were excited, what the hell is this? Do we need to do a blockchain POC? No, we don't. We still did, but yeah, it was interesting space. And then last year I decided to start splitting my time with Barcelona, so where I moved. But I've started my business in the UK. So I manage fintech review. I do strategy consulting with fintech startups in the UK, here, and in the US. And I'm also starting a fintech startup. I'm working on it. It's still in stealth mode, so it's a bit secret. Not so secret, but it's a bit. We're trying to talk to customers first, potential customers, and investors, trying to see if our ideas stick before going full on to talk about it. So we're working on that. It's an AI startup applied to financial forecasting and economic forecasting. So which means that you can do financial planning, you can do a lot of stuff with that. So we're looking at that space. But yeah, I really like fintech. I mean, I really like innovation in financial services. And when I entered really banking in 2015, my boss at the time was saying, retail banking is a boring space. Don't go there. You're gonna be bored. But because fintech was there, but not so much, so it's true, it was a boring space, but now there's so many exciting stuff happening. So there's not a boring week, and you can see with all the funding going into startups that everybody's super excited about the space. But it's true, 2015, yeah, not so much, but now it has exploded. So it was definitely the right path to follow.
Yeah, definitely. You got in at the right time. And as you said, you're sort of the founder of Fintech Review, and you manage that. So what is the story behind it, and sort of what is the vision for the company? What's it trying to do?
Yeah. So as I said, internally, I was at Virgin Money. I was Mr. Fintech. So people were asking me, "Oh, where is this going?" Blah blah. So I started writing updates for my team, then started to be for my team and the exec team, the CEO, and then I started writing updates for the intranet for everybody within the company. And then I realized, what, it's still restricting. Maybe I should write and people will know what I think about what's going on. So I started Fintech Review in January last year, and I was writing blog posts here and there. And then when I left Virgin Money, I decided to spend more time on it, so writing more. And I started doing interviews, so interviewing people in the industry, and then also welcoming guest posts. So I went from this is a personal blog to, okay, this is a media about fintech, and interacting much more with people, starting to do media partnerships and stuff. So really being much more in the industry. And Yeah, so it was born out of passion, and now I've launched a premium newsletter as well to just cover the costs of the blog, of the website. And my plan really is to try to scale it as much as possible, to have as many viewers as possible, and then we'll see. But it's really, for me, I still really enjoy doing it, and it's a kind of, do something you love and you'll never work a day in your life. So yeah, it doesn't pay the bills, but it's a cool project that I want to continue working on, especially as I have started interacting with people in the industry, talking to lots of people all over the world. It's a good tool to meet people, and yeah. So, and really, what I try to do there is to take everybody. So people that don't know anything, so they want to know, oh, what the hell is fintech? So you go and you'll find articles that try to cover a bit of everything, to like more advanced stuff. So when I do interviews, typically I'm asking people, okay, on this particular topic, what do you think? What's going on? So to try to dive a bit more for people that know a bit about fintech and they want to dive into one topic, then you can do that as well.
Yeah, definitely. I guess when you get the experts on as well, because you know so much, you can expand even more and provide that. And I find that's really interesting how it scaled from like a tiny thing inside your team to sort of what it is now. That's pretty cool. How have you done that?
Yeah. I mean, I recently passed 11,000, not 11, 10,000 viewers, like all-time views, but of which, 8,000 something was from this January, so the past 6 months. So it is scaling and growing. I went from growing very fast to now it's stabilized. It's still growing, but I'm more interested in getting people that come back, that's like what is, so quality over quantity of viewers, and people engaged more with the content, and also because I take a very opinion-based view on stuff. So I don't like to be neutral on topics. If I'm talking about the banks, like let's say I'm talking about the mobile banking apps, I'm like, okay, the mobile banking apps of the big fours are shit. Okay, fine. Let's move on. Let's talk about something else. I'm not gonna say, oh, there's a pros and cons. And same, I would call out when I see a fintech that has a shitty business model. I'll be like, this is not working, and the economics don't work, and they haven't studied their stuff. So I like to take these views. So some people don't like it, some people like it. So which is fine by me. So yeah, I'm building my viewership. But no, it's been a good journey, amazing. And you would have told me a year ago I would be there, I would have said, yeah, sure, no way. So all good.
Yeah, no, that's awesome. So, one of the sort of innovations that we've seen recently is, and especially blockchain, is sort of DeFi and DAOs and sort of deregulated and sort of all these types of companies. Do you think these will be the future? And do you think, I guess the real issue will be, will governments and all those sort of things, will they let it happen? What do you think?
Yeah, I think it's quite interesting. I mean, at the end of the day, decentralized finance is an interesting concept in terms of getting rid of intermediaries. So, which is one of the premise of blockchain in an aspect. But there are also a lot of questions about how actually it works, who's responsible, and I think regulators are starting to get their heads around it. But I think it poses more questions than anything else, because in terms of regulation, how does it work? In terms of liquidity in the system, in terms of intervention from the government, because the problem is at the end of the day, when you start looking at this stuff like DeFi, and then even more when you start looking at currency and how governments are printing money. Well, not them directly, but central banks. You enter politics. It's not just rational. Oh yeah, you know, decentralized finance. You need money. I'll just lend you money, and we don't need a bank and stuff like that. Sure, and you know, I'll lend you Bitcoin instead of lending you pounds, because then there is no intervention from the government. It's all good and well, but at the end of the day, you need to realize that governments control money because they need to print money to finance the deficits, and they need to collect taxes. Same like, oh, you know, no one paying taxes, very cool, but how do you pay for roads, infrastructure? So it's it is interesting, and I'm obviously following the space, and I think there are a lot of opportunities in that space to change some systems. But if you want to completely rethink the financial system, yeah, I mean, it's ambitious, why not? But regulators will need to be on board. Otherwise, what they'll do is that they'll just, you know, slash you, crush you, because they can. They, you know, I sometimes have discussions with people who are very into crypto. I like the space. I've studied economics, so I obviously like this aspect of fintech broadly. But you know, I'm not an anarchist. I don't think that I take into account the politics aspect of economics and finance. Whereas I see lots of people taking a very simplistic view on this. The people, they're going to say, you know, oh, power to Bitcoin and whatever. Dude, if tomorrow they say, you know, it's over, it's over. Is that they'll find a way. They'll tax it 50%. They'll tax 100%. They'll say that whatever if you're doing whatever with it, then it's illegal. There are always ways to crash something if they want to. So that's why the best advice ever, if you want to start something that is regulated, talk to the regulator, because otherwise they're not gonna like it.
Yeah, definitely. I think the thing is a lot of people who are the anarchists, they look at all the negatives. So obviously the printing of the money, the inflation, all this stuff, but they don't look at the positives that brings. So, you know, protection for the consumer, because if, you know, in these DAOs, if anything goes wrong, then, you know, you have no protection. There's no legalities behind that. So I think that's another thing as well, that a lot of the time they ignore those positives.
Yeah, as you say, you know, your deposit is protected. You know, who's responsible if it's really DeFi and it's just automated software. What if the software crashes? What if, you know, what if there is a mistake in the smart contract, and who's responsible? Because the DeFi apps guys are going to say, no, we're just, you know, building, but who's responsible for that? So if there is something that goes wrong, as you say, if you're buying if you're going into like weird products are like structured and then you don't understand what it is, actually giving power to the people is a great thing, but there are a number of safety nets when it comes to finance, because you actually don't want to give too much power to the people when it comes to complicated stuff. And this is why you have rules, and you have tons of rules. Is it good, bad? Well, it's a matter of appreciation. But at the end of the day, you elect politicians that will choose people that make this kind of rules, and you know, this is how the system works. If you want to also change that, well, yeah, it's even more ambitious. So that's why I'm taking an interested view in this, but I am also quite conscious that a number of things need to change for this to really happen as it is intended by many. It could happen. I'm not saying it couldn't, like a number of things happen in life, but you also need to look at with outside of the bubble, is that how many people want to manage their own, like be their own banks, like besides the guys are crazy about it. You know, just I was saying about the number of people involved, thousands out of millions. This is not representative, and most people are just like, you know, my bank account is with the bank. If I have a problem, I call them. If I have a problem, I go to the ombudsman. You know, but oh yeah, well, I've lost my key. I can't access my money. What do I do? Well, there is no one to call. It's your responsibility. Yeah, but I can't pay the rent. Well, not my problem, man. I just designed the app. Well, you know, you know what I mean is that a number of people, they don't want to get into that hustle.
Yeah, I think people are very risk averse as well. It's a big thing. So yeah, sort of on to my next question. I know your fintech company is actually based in London, and sort of what we've seen is, do you sort of see London sort of being a major fintech hub in Europe? And I know it's the second largest at the moment. Do you sort of see that continuing?
Yeah, I think so. London has a number of strengths when it comes to fintech, when it comes to finance. It's a mix of talent, access to capital, an easygoing regulator that you can engage with them. There are a number of reasons why London is at the top. However, as everything, you know, what I was saying about your dominant position as a company, your dominant position as a hub, it can change quickly. I mean, London has always been quite a business center, but it's been a really big financial services center for, you know, 30 years maybe. So can another city take the spot, or can it be split across cities? Yeah, it's possible. And there are a number of risks, obviously, you know, the B word, in terms of access to talent. This will need to be sorted really, because what happened so far in London is that there are a number of people coming to London to find a job or start a company. And if it's not as easy, then maybe they'll start somewhere else. And also, like, you know, the countries around, they're not sitting on their hands waiting to see what happens. Paris is quite aggressive, trying to lure startups or trying to facilitate startups being created there. Amsterdam has been very aggressive in trying to bring trading. So Barcelona, like Madrid. So all the cities are not stupid. They want companies there. So London has clearly a massive lead, and it's not going to happen overnight. But it could, if you don't nurture your ecosystem, things can change, and things do change.
Yeah, definitely. I think they almost say it's a battle to the bottom, don't they? It's in tax, but it might also be in regulation as well, as you know, what's the easiest place to do things and the easiest place to innovate. And I think that'll be quite important as well.
Yeah, no, definitely. I mean, creating a business in the UK is super easy. That's why I created it there. There are a number of language. There are a number of reasons why it's really thriving. Access to capital and stuff. But you know, at the same time, let's see, because there are also other dynamics that the concept of hub, like because with like working patterns that might change, how is it going to affect London as a hub or as a capital? Because you know, you live in a shoebox in London. Well, why? You know, why would you not live somewhere else? Reason why I'm here is that I live in a massive flat. It's half my rent in London. Okay, well, at some point, and I'm not living in a village. I'm living in the center of Barcelona. So there are a number of questions to be answered around how sustainable are these big cities, these hubs. But at the same time, it could also mean that a lot of people create businesses in London without being in London all the time. So it could also be very much going in the other direction, like really cementing London as a big hub for fintech. That's also possible.
Yeah, it's interesting. I'm sure the weather's a lot nicer in Barcelona as well. uh, a bit warmer at the moment. So sort of before you talk about embedding as a really interesting innovation in fintech, uh, I'd just like to ask: is there any other sort of technology or sort of even company that you think you're really excited about that just looks like it's going to innovate the space?
Yeah, I mean, Stripe is obviously massive. Now there are rumors that they're preparing for an IPO. Wise was a big IPO, but wait until Stripe does an IPO. The online payments obviously is huge. Buy now, pay later. I think I like the concept. I think it's interesting. I think they need to do a bit of more work around really telling customers that it's a loan, because people can get into debt quickly. They would argue it's better than a credit card, but I would argue that okay, let's try not to get people into debt, like full stop, because it's not great to build your wealth. So I'm quite passionate about financial education and telling people what they should be doing, what they shouldn't be doing to build their wealth. I think there's been a great amount of work done in that space, that democratizing a number of things. But at the same time, Robinhood, they incentivize you to do like 25 trades, like dealing options and stuff. Dude, this is not I mean, this is not investing, it's trading. And most people, they don't make money. So I'm more into, okay, guys, you want to build wealth for the long run? Well, you need to go into boring stuff, diversification, buy some ETFs, buy some, real estate, but buy wealth for the long run rather than trying to do like this get rich quick schemes. So there have been a few things done in that space, but I think there are more to do. And I'm working on this. So I
Yeah,
know there's space in financial planning and wealth management, but more from okay, this is your situation now. You want to be there. This is your goal. Okay, you need to take all these steps to get there. And I think there are stuff to do in that space. And yeah, and more globally, seeing a lot of innovations coming from Europe, from the US. I think China is a problem. Like now they're going hard after there's a fintech that drove the innovation in Asia, and it was they were the poster boys for innovation in fintech because they leapfrogged many things. But yeah, it will be interesting to see what happens now, because obviously, I think it's going to put brakes on a lot of innovation, because I mean, as ever with Chinese government, they can change the rules if they want to.
yeah,
Now they're changing the rules, so a lot of companies are in trouble now. So yeah, and then at more, I guess this is not only fintech, but I'm also looking a lot at what's going to happen in real estate. Property prices are very, very hot in several markets. So what is going to happen? Because it's not, in some markets, it's not really sustainable. So we'll see what banks are doing about it, what central banks are doing about it, how it might affect the whole fintech ecosystem around mortgages. Will be interesting to see, but it's been really, really hot in some markets. When you see stats in the US where over 60% of the people have bought a house without seeing it, I mean, there was a pandemic, but still, it is a bit nuts at the moment.
yeah. I think we're seeing as well with a lot of the property markets, is a lot of private equity investment companies are also acquiring these products. I think I saw something where BlackRock acquired a whole block with, I think, now 40% over the actual market value of the properties. So that might be another thing that we're seeing, that people, these massive companies, just billions and trillions of dollars, are actually, pushing the price up just because they see them as long-term investments over the future.
Yeah, no, definitely. I think the thing with quantitative easing is that the money needs to be parked somewhere. So
yeah,
once equity is through the roof, then you go for real estate, then you go for VC. but yeah, no, I'm just curious to know what the, as you say, is a very long-term plan. But if the work patterns are changing, who's going to rent your commercial real estate in city centers? Who's going to buy your flats? Because if people say, no, I can leave now, I can leave 2 hours out of London without commuting every day. So I don't know. I feel that we'll see what happens. But I was talking with a friend today about real estate. He works for a real estate investment manager, and about like the dynamics and ecologic transition. So, and like changing work patterns. What's going to be the impact on real estate? And it's quite big unknown. So that's why that with property prices going like crazy, because they need to park their money. How is this all working out?
Yeah, perfect. And you talked about there about like Robinhood and sort of the almost gamification of investing and trading, and it's almost like gambling for a lot of these people. And then you talked about sort of before about your own self-mode company, where it's sort of about planning and education and stuff. Is that sort of linked? Is that sort of what your company is maybe planning on doing, but in a more responsible way?
Yeah, so I think gamification is a great way to get people interested in finance, and the fact that people are interested in investing, I think it's great. Like, you know, the whole, even though it was nuts, but the whole GameStop mania, I think overall that people want to take control over their finances and they want to build wealth. That I'm really in favor of. And as I was saying, I think there's a lot of things to do with financial planning. So telling you this is your situation, this is where you should be going. And also because you can buy everything. Now you can get exposure to everything. Look back 10 years, you couldn't get exposure to get like a decent portfolio. Like, I want commodities, I want, you know, venture capital, I want real estate in different markets and stuff. Now, to be honest, now you can do it. So, but this is what you need to do. You need to have like some kind of strategy, and you need to do your financial planning. If your goal is to have $1 million in 20 years, well, okay, work for it, but don't tell me it's you're gonna do dollar cost averaging Bitcoin to get there. No, like, allocate if you want a bit to crypto, fine. Allocate a bit to real estate, allocate a bit to equity. Build this strategies, this financial planning. And yeah, so this is the space I'm looking at, because I think that there's stuff to do. Because at the moment it's a lot, you either go to a robo advisor, but you give the keys, so you're like, okay, here is my money, ciao, and you're not involved. Or you have on the other end Robin Hoods saying, oh, do whatever you want. You can buy like exotic products on like calls and puts and stuff, and yeah, and CFDs. Well, there is some space in the middle where people that maybe you need to give them the tools so they can build their own financial like strategy, financial planning, and they don't want to give the keys because they're interested in actually knowing what's happening. But you don't throw them in the water and be like, you know, swim now. You need to actually do this work on, this is what you need to do, this is why you need to do it. Because, you know, you were saying people are risk averse. Actually, it's just, I think there's a big misunderstanding on what risk is. People are not risk averse, so they would take huge risks without knowing. If something can go up 100% in 2 weeks, dude, it can go down 100% in 2 weeks. That's rule of thumb. That's how it works. If it's boring and it pays you like 1% a year, it means that it's likely not to lose like any value. So, and when you build your strategy, your financial strategy, your portfolio, you actually try to balance these things so that you get a decent return overall. But yeah, you need to just decide if you want a strategy that can return 50%, just be ready to see it going the other way. And I think a lot of people actually are not ready for that, and they need to get grip with. I mean, for me, like personally, I'm not ready to see my portfolio down 50%. So I build my portfolio in a way that I'm not going to see that, and I'm still doing like good returns. It's not not Bitcoin returns, but I'm also less likely to see it. Oh yeah, I bought at 60, now it's 30. Well, cool. I mean, yeah. So
Yeah, no, definitely. Well, yeah, Tristan, thank you so much for coming on the podcast today. If people wanted to get in contact with you or follow you, what would be the best way for them to do that?
So I'm all over the place. I'm on Twitter, fintech underscore review. I'm on Instagram, fintech review. I'm on LinkedIn, Facebook. Can drop me an email, hello@fintechreview.net. And you can connect with me on LinkedIn. I'm always keen to talk to people. Like, if you want to hop on and talk about crypto, let's talk about crypto. I'm always, I really believe in debating ideas, and having a structured conversation about like fact-based conversations about stuff. So I'm particularly keen to talk to people who have very different point of views.
Yeah, definitely. I think that's the thing, is keeping it non-emotional as well. Sometimes people get very emotional about things, but just
Exactly.
using the facts and doing it that way. Right, awesome, Tristan. Thank you so much for joining us.
Thanks for having me.